Hey guys, good afternoon. It's Vinod from GrowWealth. Hope you're all well. Today is the Sunday, the 22nd May 2022, and let's look at the stock market update, analysis, and also the relook at the watchlist stocks that we had from last week, how they have performed, and is there any learning points and any new trading setup out there. Okay, let me share my screen. As usual, we'll start with the put call ratio. So put call ratio is currently at 1.09. And as you can see on the screen, the green line and the red line are the cutoff line that I follow. If it is above the 1.1, that means the traders or investors are leaning bearish, and it's a contrarian indicator. So that could be a short-term bounce in that case. If it is below 0.8, a lot of traders are leaning more bullish, which means it usually goes the other way around. So that could be an intermediate or a long-term top in that situation. So the market has been fluctuating, as you know, you've been watching it. Despite the real bad action, still people are expecting a bottom and also buying the dips. And as a result, there is not much of a bearish sentiment, broadly speaking, in the market, as indicated here, that the CPC index hasn't gone beyond 1.1 as of last week. It did briefly here, and there was a couple of days bounce, and then people immediately became more bullish. So it's still in the neutral zone. So that means it could still get worse. Without spending too much time on this, let's now move on to the major indices. Let me change this to my usual setup and bring in the indicators here. So as usual, I use 8 EMA, 21 EMA, and 50 EMA. And occasionally, I also look at the 30 simple moving average on the weekly to look at the stage analysis of any stocks or indices. So this is S&P 500 on the weekly chart. And as you can see, it is in stage 4 downtrend. And it has hit and breached the February 2021 high last week. And if you can see all the way from here, the 4th of April onwards, there's been 7 consecutive weeks of down market moves in S&P 500. The last time it happened was in the first quarter of the year 2001, so between January and March 2001. That's when we had 7 consecutive weeks of down weeks in S&P 500. It didn't end very well after the March 2001 because we had a further crash for 2 more years, and overall the market went down by nearly 50% during the dot-com burst. And right now the S&P 500 has gone down about 20%. So more downside is possible. Clearly, the chart indicates bearish action. The same could be said for QQQ, which is the ETF for the NASDAQ 100. And it also had 7 consecutive down weeks, and looking even worse than the S&P 500 because it breached below the August 2020 high, and it is on its way down to this previous resistance just before the coronavirus crash 2020 February high here. But a bounce is possible. Bear markets are known to have relief rallies and dead cat bounces, and we did saw that a few days in the last couple of weeks, but overall the market wasn't strong enough to sustain the bounce and ended each of the last 7 weeks down, as you can see here. So zooming out and looking at the bigger picture, the major indices are in the downtrend, stage 4. And it's significant to keep your focus on the major trend and the broader indices because majority of the stocks tend to follow the broader index direction. So if the market, as shown here, is on the downtrend, then most of the stocks also follow suit and pull back and crash, as we have witnessed in the growth stocks in the last few months. So this is NYSE Composite Index, same story, stage 4 downtrend, working its way down to the 2020 high. This is Dow Jones Index, breached the support level from May 2021 and almost breached the August level as well. Did it? No, breached the December, January level 2021 on its way down to pre-COVID level. The IWM, that's the Russell 2000 index, is worse than the other indices because it has come all the way, retraced all the gains it had post-COVID and touched the February 2020 high in the last couple of weeks. So will this act as a support? We'll have to see. Last week we had an inside week. We'll have to see if that kind of consolidates here and finds any relief rallies from here onwards. But nonetheless, it is all bearish. Cryptocurrency is not doing that great either. I'll come to that in a second. This is the UKX, which is the FTSE 100 UK index, stock market index. This is a little bit better. It is above the 50-week EMA, and it is not. Is it in stage 4? Let's introduce the. It's just sitting at the 30-week moving average as well. Indecisive whether it wants to go down, or certainly in stage 3, I would say. This has lots of defensive names, utilities, oil and gas sector. So that is propping this index up a little bit, much more than its counterpart in US. So it's a little bit better compared to the US stock indexes, but not glaringly bullish either. So I was talking about Bitcoin earlier. Cryptos are not doing very well with the risk of trade setup currently, trade sentiment currently. Bitcoin is also selling off, and it's flirting very dangerously at or just below the support level of $30,000. And it's been repeatedly testing this support level. And if it breaches, then that's the big drop possible here. So far, not looking that great. Right, moving on to the individual stocks that we had in our watch list previously. And I'm watching these stocks week after week because there's not much new setups coming up. And it's useful learning point to look at a set selection of stocks based on the trend and the sector that in uptrend, and to see how they perform in this bear market, in the fluctuant market week after week. And you could see how selecting a stock on the sector in the uptrend, even during the worst situations like we have now, can result in good trade setups and a profitable trade. So this is Shell that trades in UK, also in US, but this stock shows the London Stock Exchange graph. So it's nice and uptrend. Broke above this kind of support turned resistance level, and it's kind of finding some pause in the last couple of weeks, which also there's lots of upside resistance there. But if you zoom out and look at the bigger picture, it is in the uptrend, and the key moving averages are all pointing in the right direction. So it is a bullish chart. I'll also introduce the Mansfield Relative Strength Index at the bottom here. So anything in green shaded area is the relative strength is above 0, meaning it's above it's outperforming the S&P 500 in the about the 52-week moving average. So that started here when this kind of resistance broke out, and ever since, other than a couple of kind of blips here, it has been in the uptrend. Next one is SLL, Scholler Blackman. This is an oil and gas sector stock as well, and it started the relative strength positive level here when it broke out of this kind of mini pivot level. However, it gave us another entry point following this tight consolidation and broke out here on higher than average volume. And since then, within the last 18 days, it has given us about 20% return. So that is why it's important, as highlighted in the recent training video that you can access in our blog page, How to Read Stocks for Beginners. It highlights the uniqueness and the benefit of identifying the tight consolidation and breakout with volume clues as well. In this case, it is also in stage 2 uptrend. So it is 2 and 2 together, stage 2 uptrend, tight consolidation and breakout. It works in your favor. So this continues to be a good bullish setup, as you can see. We had a good strong week, 18% gain in just 1 week. Moving on, VT and R, it is forming it's just broke out of this cup and handle the last couple of weeks, and it has moved nicely 30% or so in the last, ever since it broke off the handle. So yeah, as you can see here. It gave a doji sign. It is still in the uptrend. It's a little bit extended now. If you want to re-enter it for the first time, you would have to then look at the lower time scale to see if you have a good entry point. It had its earnings and had some further up moves. It is consolidating about the 8-day moving average, so it may give us a setup. But looking at the weekly, it continues to stay strong and bullish on the weekly setup. SOI, solar oil fields infrastructure. So this again is another oil and gas sector, because that is in trend. That is one of the very few sector and stocks that are in uptrend. So it's important that you stay in trend and stay in line with the trend. So it broke out here into stage 2 and gave us a sideways consolidation, a bit of whiplash here. I got kicked out, flushed out here, but then it regained its footing and is continuing its uptrend. So it's still bullish setup. LTHM, Livent Corporation. So it had its long-term support resistance that it broke out, failed, set up another base here, broke out, and then retested around $20 mark. And now it is kind of trying to build its base and move up into a new uptrend, as you can see. So it's kind of yo-yoed between around the 50-week moving average, and it seems it's kind of building some momentum on high volume, high relative strength. And if it continues the momentum going about this kind of trading range of last week, it's likely to continue its uptrend further. So this looks quite encouraging to me. ALB, Albemarle Corporation. It had fantastic run here from May, June 2020 onwards, all the way up to the beginning of this year till February. And then it broke below the 50-week moving average. And then it kind of put some, putting some base and consolidation here, a little bit loose than what I would expect to see. But then we had a very strong week of nearly 26% on high volume, and it also regained the Mansfield Relative Strength positive index here. If it breaks above 242.56, around 243 level, that'll be a good sign that it is resuming its uptrend. So if I were you, I'll put a line here and watch that level. And if it breaks above that on high volume, then that's a good indication that a new uptrend is resuming. And as you can see here, there's a nice kind of VCP pattern that Mark Minervini talks about, volatility contraction pattern. And on its breakout here from 173, it quickly moved to 250 within a few weeks period. So that's why it's important to zoom out and look at the bigger picture and let the stock and the structure of the stock guide you rather than force a trade. NTR, so this is still in uptrend, stage 2. But it's kind of pulling back. If you look at the 30-week and close off the other short-term moving averages, so it's kind of moved quite a way above the 30-week moving average. It's gently pulling in on slightly lower volume than previous weeks, but it's still above the average volume. But the relative strength index is still showing strong uptrend. It's still above the 30-week moving average. So it wouldn't be surprising. And it's a good sign if it consolidates around here, let the 30-week moving average come and catch up, and then resume its uptrend. It might then give us a good entry point with a relatively safer risk profile. So let me introduce the other moving averages here. Right. So yeah, it's still in a reasonable uptrend if you look at the weekly chart. AMR, even better than the previous chart. It's still above the 8-week moving average. But high volume distribution days are coming up. So there are lots of selling happening. The stock hasn't broken down yet, but this high volume down weeks are a little bit concerning. So it's something to watch. If you go to the daily setup, it's still above the 50-week moving average. And it is having another consolidation level here with the descending trend line that you can connect the tops. So if it breaks above this descending trend line on decent volume, that'll be a good sign that it could resume its uptrend again. But if it fails that, breaks down below 50-day moving average on high volume, then it's a cost to pause from this stock and see how it sets up going forward. But from the weekly, as you can see, it's still in the uptrend, and it would still be in the uptrend as long as it doesn't breach the 30-week moving average as per this stage analysis. But right now, it's worth watching the stock and not jumping with the trade yet. I've introduced wheat, and this is the ETF on the wheat commodity. It had this breakout and huge run in the couple of weeks since I've added this, but then the selling came in last week. It's quite understandable. It's expected. These pullbacks to the key moving averages. So it'll be interesting to see whether these 8 and 21-week moving average, sorry, 21-day moving averages act as a support and resume its uptrend, or it crashes. So if the war in Ukraine settles down, which everyone is expecting or wanting to, then it will be a good sign for the humanity. But and also the wheat prices might come down. So if you're in the trade, you may want to position accordingly and adjust your stop losses as per the news. So right now, because of the selling that happened, profit taking that happened last week, it's useful to watch and adjust your stop losses to protect your capital and any profits that you may have had in this trade. As you can see, the distribution weeks are of higher volume, much more than the up weeks. So something to watch and adjust your position. So not overtly bullish in uptrend, but there are some distributions coming in. So time for caution here. And the last one, a new name for this week. Okay, this is NTCT. Netscope Systems, cybersecurity sector, I believe. So it is in the stage 2 uptrend. Let me close this short-term moving average and use the 30-week moving average as shown here by the yellow line. So it is in stage 2 uptrend, but more consistently showing relative strength here. But it went on the sideways direction and giving us about 20-25 weeks sideways consolidation and broke out here on above average volume. It is not a perfect setup because the week before last had higher volume than the previous week, but that didn't totally break out. But that was the higher close compared to this high close previously. But the height of the candle did not break out. Last week it did, but it was on the lower than previous week volume, albeit it's higher volume than the average volume. It is on the it is showing some relative strength, broke above this consolidation pattern, above the 30-week moving average. So for me, this convinces me to as a good trading setup. So I'm looking to I'll be looking to enter a trade next week at some point, and if I'm doing so, I'll be using the structure low here and the 30-week moving average low here to guide my stop loss. So this is shown here as an example for this education purpose. Don't just blindly follow and buy and sell based on what I say. This is use it for educational purposes only, please. Needless to say, because market can do anything tomorrow when it opens. So I'll be changing my views if the market gives me a different indication. So go with what you see in the chart and what the market tells you, and have a good, clear trade plan. Plan your trade and trade your plan. I hope this analysis was helpful. And let me finish with the overall stock index, S&P 500 index chart to give you the bigger picture in mind. Stage 2 downtrend, still no sign of a good bounce. That can happen, but right now we don't have it. Stay cautious. Cash is a position. If you do want to trade, identify the stocks in trend and look for good setups as shown in the GrowWealth video. And if you want more guidance, of course, join me and other like-minded members in GrowWealth in continuing to learn together and be on the same side as the market in order to kind of compound our return over a long period of time. Don't fight the trend, as people say. Okay. Hope it was helpful. Happy learning and successful investing. Bye-bye. I see you in our next week's video. Bye.